All right, so I guess a formal good morning again, and let's do some analysis. What time is it? 8:49 New York. Just disable this for now. And you guys get to pick what trades. Well, we're already on NAS. I'm gonna analyze NAS anyway. AU. All right, cool. AU gold NAS. Let's keep those for now. Just exited NAS longs, and I'm going to let's go full screen, show you the model, and if we see anything else, we will play. Close ads. Oh, there we go. Okay. In real time, I just exited longs. I didn't get to paper trade it as well to show. So bummer, but just exited these longs and I entered here. So while I'm looking at the chat, feel free to look right here and see if you see the model. If you don't mind, why does the OB candle close as an up or down candle to be an order block? Wouldn't it be enough for the candle to take out liquidity and close in whatever color? That's very interesting. You know, I've never thought about that, or maybe I have. So the idea is that in order to mask positions, this is what I understand. It could not or may not be the absolute perfect answer, but this is what I understand. In order to mask positions, large transactions enter in opposing liquidity. If the market's bullish and you enter with large buy positions, then we have huge displacement, right? That's what we understood in the beginning. So I kind of stuck with that analogy because I haven't seen anything that disproves it. Trade through the open. So I entered the exact price was, so grab my phone. 11,736.4. I don't know if the feed is going to be the same, but I'll outline what was there. So before I do that, I need to put 8 o'clock on right here. So that's when I start stocking setups, right? Right before 8 o'clock, we have two relatively equal lows here that were rated. And these were rated. Where's the candle that closed below them? Just kind of edit there. Right here. That's the candle. So if that's the candle, I hold no bias. I don't care what price does unless it trades above this. Once it trades through this candle, then I'm bullish. Nasdaq last week's low. More than likely, I don't zoom out that much. When you said last week, I was thinking something else. So we have, bam. So I'm explaining the model, right? I start trading at 8. So my trading day starts here, which means my look back starts here. Did this take liquidity or did it trade back into a previous range? Well, it did both really. But the last thing it did was take these lows. So because of the OB model and the rules around it, I'm not trying to think about a million things. I'm only looking for confirmation to run liquidity. Order block created, trade through the high right here. Well, this actually closed above the high. So that's even more confirmation. That tells me I'm going to go long here. If I want to go long here inside this order block, I need this retracement. Fair? Need this retracement. Targets. I just clicked on one of these, right? I use MT4, guys. I'm just using TradingView for the persons who like TradingView. I don't care anything about what feed or whatever here. Doesn't matter. I don't think it matters really, but that's just me. There could be a reason, but For me, it doesn't matter. These are the lows right here. Trade down, my order block. Here, liquidity. This comes back down, I go long. This I anticipated for many, many reasons. The first one is, this is the first model I shared on YouTube. And if you haven't seen that, don't ask in the chat, it's on the YouTube. This is the first entry model that I shared, complete trading model. This is the second one. So now we have refinement for confluence. I want my entry to form here, but to stick to the rules that I've already been using, we need a dealing range. We need a swing that takes sell side and a swing that takes buy side. That's our dealing range. So at this time, when price trades through this high, let's put it at both of the highs. When price trades through this, our dealing range is created here. Sell side taken, buy side taken. So we want that retracement back at 50%. At 50% of this dealing range, we have opening balance, FEG, down candle, inside our order block. See all that confluence in here that says buy this? So if you have all that, you could key off that order block here. Stop placement can be below here if it fits your pip target objectives, meaning I don't like stop losses that are more than 20 points. I feel like if your stop has to be more than 20 points, and you could have waited for a better entry. So between the opening price of this candle and here, it's less than 20 points. So I'm fine with that. Targets right there. And partials can be taken right here above this high as prices expanding outside the dealing range as well. All right. So that's a trade. That's a trade I took. I took the bulk of my position off right here when this was happening because I'm not greedy, and why not? I mean, look how close this is. It started hesitating and I closed here and I moved on. I'm gonna introduce vaguely an idea, vaguely, right here. At this point in time, I expected this to push higher. So when I was in the trade right here, I was up X amount and I decided to not take partials because of what was happening right here. Already had a liquidity, already had liquidity taken here. The imbalances created here have been rebalanced. Imbalance created, rebalance, which means this guy has no liquidity to take and no imbalance to fill. So I don't need any retracement starting exactly right here. What I needed to do is to run to the liquidity. So if you look at the opening price of this candle, you'll see that it's just below these lows and just below our objective right here. So I anticipated this to expand higher. Questions in the chat. How to trade continuation if you miss reversal entry, please. Okay, cool. I'll adjust that one. Nate. Nate, you realize what I just did, right? I explained how to spot that specific profile, the conditions that we need to determine how this range is going to be formed. Cool. So once I have that, once it expanded, I'm fine. No need to. This right here is a matter of rule and psychology. Could I have waited for take profit? I could have, but I didn't want to, full stop. No greed, no fear. I felt like this was enough for me and I walked away. The next setup was on gold. For this model at 8 a.m., do you check for the pool taking out, then aim for the opposite, or you already have? So I don't trade bias. Very good question, Clint. I don't trade bias. I look for where the liquidity is in the market. Let's get this off. Not a trading view fan. I look for where is the liquidity in the market, and I look for where we open. That tells me where we are in the range. So that's the general theme of how I trade. What time is it? Where am I inside the current trading range? Did we take liquidity? That might not be in the specific order, but those are the three things that are important for me. That helps me to frame what's the next likely direction that market's going to expand to? If it's already taken sell side liquidity and it's inside a range, is that liquidity internal or outside the range? That gives you an idea. Because if we create a range, let me draw something here real quick. If the market's doing this and it creates a range and we trade back inside the range and there was maybe a lower low, a higher low inside here, they take this and then we push outside of that. This right here is framing an expansion higher. This can be taken to mean many, many things. For instance, let's say this is an hourly chart. All right, this is an hourly chart. And we have Monday starting here, and that was Friday. So by default, that becomes Tuesday. What we have here is Friday creates a range low, range high. Well, the range high would be this in terms of the expansion, but that's Friday's high. Irrelevant. This is irrelevant. That's a trading range. This is a low from Friday. Monday takes that low. We're still inside this range if there's no liquidity or imbalance down here and the market pushes above here. That's an entry model that I shared in a video recently. It's called the R3 model. When you see this fractal inside a range, the stop hunt takes this low but fails to get below this. You watch this candle inside here, push. Once it goes above, there's your entry, game over. That can be confluence with the order block model that taught recently. Right there, then you have overlapping confluences inside the order block range, which is here, and this. So highest probability entry, where they meet inside here. Stops below here for safety, wherever the liquidity target is. That's it. Now, if you take a look at that carefully, you take a look at this right here. Highest probability entry is going to form right here. Stops below here and the liquidity target. Hidden in plain sight. Let's see what's in the chat and then we'll jump to our next chart. Does the order block have to close below or above the valid to be valid? By definition of what an order block is, you don't need a close, you need a trade through. GU, sure. I'm actually going to cycle through some charts now. So I'm going to go to gold next. XAU, USD. What am I doing? USD, there we go. And I guess this feed, forex.com. I have no idea why this looks so colorful. But same idea here on gold. Let's grab 8 a.m. Let's move this guy down here. Give you a second to take a look at this. So do you do this without looking at higher time frame? That's correct. Eventually, when you understand what I'm actually showing you right here, you'll realize why you don't need a higher time frame. So let's take a look at this. All right. And let's think about the three things that we mentioned that we needed. They are the time already given, the range, easy to find, the zoom out, and liquidity. The last time we had a liquidity run was this big down move right here, which means liquidity was resting below. I guess you could put it at any of these lows. In this case, it doesn't matter because this down candle is expanding through all of them. So it doesn't matter. Bam. You take the same approach in London. Yes, you just need to know the timings for London. Big down candle, which means automatically my order block or my order block candidate, say the right words, is that guy. Okay, If that's my order block candidate, it's a very large order block. My rules are whenever we have a large order block, split it in half. Give yourself a discipline that says if it's a large order block, split it in half. Why enter here with a, I mean, if the pip count is less than 20 points or 20 pips, you should be fine. I think you should be fine. Then we have the low coming in right here. This is the down candle over here at the low. So that's the confluence. Now, take a look at this. This is when your understanding and rules will trump price action. We traded above the order block right here. This is the first time. Whether you want it to look at it as a close or a trade through, both of them is right here, which means when price is coming down, you're looking for your entry to form. Confluence says the highest probability setups should form inside these overlapping areas. But because of this order block, you want your entry to form below 50% here. So starting, I need an arrow. Okay, I don't have an arrow. I'll just put it over here. Starting at the closing price of this, you start stalking longs. Watch it going down. If you enter here, your stop is here. This is FOMO by definition because you have rules that are contradicting each other right here. You're bullish. Your rules are saying your entry should form when price is going lower. Your rules are saying highest probability entries are going to form down here. Okay? Oh, pay attention to this part. If you miss this entry, like the question somebody was asking, where would your next high probability entry form? Inside here. See the expansion above this? Price comes back down. When this is coming down, that's an entry. Or if you caught this, that's also an entry. Many confluences here. Since this portion has already rebalanced this and liquidity has been taken, we don't need a deep retracement. So you watch the expansion leg, which is this. In particular, the expansion leg is right here to right here. So I'm going to take something off here. So I'm going to press delete. That's the expansion leg because this was rebalancing. And then the push that broke above highs started right here in this down candle. This is what you pay attention to. Entry, perfect back at the order block because expansions are paired with order blocks. Entry to go long, targets, relatively equal highs, zoom out, highs above here. Let's tag that. So let's frame the trade idea. Where's that buy thingy? So either one, if you entered at that, if you're being cheeky with the stop, that's your stop. If you're allowing for that area, that's your stop. That's your trade. I entered gold at 1661.84. Somewhere down here, which should have been somewhere from over here. Don't think that because this is the last part, that's where I entered. I entered here based on my rules. All the models playing out right there. Check the chat and then move to the next pair. We can focus on the OB that caused the break of that last. Yep. Price and time fractal. To come full circle, I'll just add that time again. I put on the last one. So in this case, we have the liquidity objective right here. We traded to it inside this. I'll call it a cycle. It means here, we're not likely to expand above this high. Why? We already traded to the liquidity. So if you remember on NAS, at this time, we were still below the lows, the highs really. We're below the highs. So I expected expansion higher to take the high that was formed between here and here. In this case, we've already traded to the liquidity ahead of this time, which means get out and stay out. Allow this to play out. Don't allow yourself to, oh, it's bullish or it's going to reverse because it took liquidity. You don't care what happens here. This is your target, not your sell entry. Don't get them confused. So many things are here, but yeah. So for the guy who had asked me, how do you get a continuation entry if you miss the original reversal? Have a clear reference point. If I'm bullish, where should my entry form? If I'm bullish, where should price trade through to give me confirmation? All of that has been defined right here. So you don't need this entry. Allow this to form to give you more context behind why you should go long and not short here and then hold for down here. And then listen to why after this rebalance, we don't need to get back below here. There's a push. Second confluence again. Taking that. Retraces. Whole lot of stuff inside here. I look at AU. I think AU was the next chart. AU. So AUD USD. And I use forex.com feed by default because that's how I learned it. That's what ICT recommended. If you're wondering, where did you learn it? Yeah, when you're in mentorship, he suggests that you use that to have the same chart as him. All right, let's take a look at this. Here's the start of the day. How and when you can anticipate a change in the state of delivery? The first thing to use to anticipate a change in the state of delivery is time. Time is the first thing. The second thing is delivery. The delivery that you're looking at, what has price done? Where are we now? Where is resting liquidity in the market? That's it. It's not about bias. What's the bias for the day? You really don't care what the bias is. And whether you believe that or not, I'll submit an idea to you. Then I'll jump to the analysis. If this is a daily range, if this is a daily range and the market opened here, most persons would probably think that because the high of the day was formed here, this day is bullish, because most persons believe that bias means where does the day close. I don't care where the day closes. Neither should you. We don't care really. If it opens here and we have liquidity here, all I'm interested in is the run that goes to that liquidity. So just to borrow ICT's PO3 for a second, if we drop down, we get a shift and I enter here. My bias is bullish. I got my target. I'm not going to go short here. But if this guy runs lower, really far lower, then closes here, is this day bullish or bearish? If it closes a doji here, then are you going to say that there's no bias for the day? No. Based on how you were looking at the chart, you could have seen this as maybe a high in an overall bearish market structure. So you're looking for internal liquidity grab inside that range and then go short. Maybe you saw that this was a short-term market structure shift on a lower time frame, hourly chart. So you're looking for buys here when price is rebalancing this leg. Or another way to look at it is when price is retracing inside the dealing range, you're thinking to go long here. Your bias is bullish. This guy's bias is bearish. Nobody's wrong. You're both hunting liquidity. So if you're seeing buy side and you go long, your bias is bullish. If you're seeing sell side and you go short, your bias is bearish. This is irrelevant. That's how I see it. That's how I learned it, and that's how I understand it. Bias and liquidity delivery is different because liquidity delivery is a real thing and bias is a made up thing. Kind of like trend. There's no real. Let me not go in to offend anybody, but yeah. I'm just hunting liquidity. I want a clear liquidity draw. I want my process. Step 1, step 2, step 3, enter. That's what I want for my trading. Which means I don't have to guess here or guess here or try to pick something. I'm working with a logical There's a change in the state of delivery happening right now, by the way. I'm working with a logical approach. If this, then that. If we take the lows, I want to identify the candle that closes through the low. Step one. Step two, if this is bullish, I need price to trade through that opening price, and the high is perfectly fine as well. Step three, once I have confirmed my dealing range, I want a retracement back inside the dealing range. Retracement seek imbalances, but not every range is inefficiently traded. Some ranges that are balanced, aka balanced price ranges. So you have to look for, if there's no inefficiency, get your fib out and use your 50% and look for confluences. Step four, all my confluences are aligned. I'm entering here. I can't move the market up, but I'm following the rules. After 1,000 trades or 1,000 hours of backtesting or 1,000 look for, is the odds in your favor when you trade like this? If you find that it is, I have no fear entering here with my stop below here, even if the market does this. The risk is managed. Today is just a loss. That's it. Move on. I took a loss Thursday and I took a loss Friday. Both times my bias was completely correct. I shorted NAS, it stopped me, and then it screamed low. I long NAS, I got some, but it stopped me out first and then it screamed higher. Both cases I'm correct. Doesn't matter. Today I made it all back. So your bias is well, forget about bias and think about liquidity. If you can't find the liquidity, you are the liquidity because you're putting your stops wherever. So if the whole dealing range has any kind of inefficiency, you just trade off the 50. You look at the 50 first and you look for confluence. Is there something at the 50? And I'll answer that question and then jump to another chart. Time is fractal, yes, which means what you see right here, you could see it on another time frame. Does the time matter? No. What matters is the delivery. Is it happening in the order you want it to see? For instance, let me answer that question first and then I'll get to the 50 question. For instance, let's say you're someone who trades stop hunt. A stop hunt can happen in many different ways, shapes, and forms. Lows, price stop hunts the low. Do you buy the stop hunt? Price trades back here, then it crashes. This is a stop hunt, right? That's a stop hunt. Do we have a target? Let's say there's a high, price takes the high, stop hunts the low. Are you bullish or bearish? Again, that's a stop hunt. If you buy that, you're likely to get crushed. Or price stop hunts, then goes back inside the range, and you start thinking, okay, we just ran liquidity and we're back inside the range. If it's gonna go lower, down candles here should give way. Up candles should be pushing price down. So price trades up, maybe there's an up candle right here. It's failing to close above the up candle. Okay, give me a market structure shift. How do I frame a market structure shift right here? I watch the up candles that get formed and I watch if we're closing below them or we're trading below them. Wink, wink. Wink, wink. But yeah, that's my mother right there. Somebody just pointed it out. Lovely, lovely, lovely. I didn't see that short. I saw the long. So we had liquidity runs inside here. This guy traded above. This would have been my long if I was trading AU. I wasn't. But just so you can see, that's the last liquidity hunt.
It's a market maker sell model in 5 minutes.
Really? Nice. Doesn't really matter to me. Just need the times and the prices. Order block. Look at that confluence. So remember what we're saying about this candle here, in particular the opening price. Here. Now, based on how you frame your trade, this could have been a trade that you missed. Would you cry? No, you wouldn't. Let's call it a missed trade. But there was a long inside here. And then we had our good friend dealing range being formed here. Here. So this is the thing I was saying earlier. These are the highs inside here. There's a push. This expansion higher started here. So you could reframe your trading range like this. It's not a dealing range, it's a trading range. You don't need a fib for this. You could literally look at this delivery. But if you want confluence, keep your dealing range on. At or below this price, we have FVG, we have order block. I'm gonna go long here. If you long here, where's your stop? You're framing the trade off that. But again, if this is less than 20 points or 20 pips, I'm fine with that. Where's my target? If it's gonna expand, it should take the high right here. Right there. You could use this to trade an entire daily range. An entire daily range you could trade like this. So you would have entered here, first target, partials, depending on your entry, that could have been a break even top, or it could have been a second entry. It's not the greatest trade. It's a 1.6 to 1, but it's a rules-based trade that you could repeat every single day. Another way to frame your exit is recognizing that that high was taken right there. We have that candle opening price there, and we have this right here. This is as high as it could go. You don't want to see it going above this, or that invalidates your model. This is your model forming twice. So when the model forms twice, low hanging objectives comes in play, which means opening price of this candle is the furthest your take profit should be, right there. We have 6 minutes. I think we have time for another one. Your dealing range high, haunted liquidity, why you didn't think about sell? My dealing range high, haunted liquidity, why I didn't think about sell? It's a very good question. I'm doing EU next for Alex. Look at it this way. Everything you see on a chart can be defined if you pay attention. A dealing range can be defined. It doesn't mean that you have the correct definition, but it gives you a rules-based approach. For me, if I have a dealing range that takes sell side first, I consider it a bullish dealing range. If I have a dealing range that takes buy side first, I consider that a bearish dealing range. So then I'm only looking for confirmation. I'm not looking for dealing ranges took that, let me go short here, because you get this and you get hopeful and then that takes you out. You stick to the narrative. What's the market saying? Remember when I said that changing the state of delivery here? There's that rundown. Like stop on breaking market structure. Kind of like that idea, yeah. Or AMD, or I don't know, any other thing. I think somebody said this looks like Quasimodo or something. But whichever way you understand it, it doesn't matter what you call it. At the end, it's do you understand it? That's important. EU was the next pair. EU, and by default, I just need to know where my 8 o'clock opening price is. There. What do you use? I use my 1 hour chart for hourly ranges. That's it. Eventually, I want to stress what time is fractal means. This fractal here is a fractal, full stop. If I see it on a 1 minute chart, it means I could get a 20-point scalp depending on the pair. If I see it on a 1 hour chart, I could get probably a 50 to 100-point scalp depending on the pair. If I see this on NAS H1, I'm guaranteed 200 points or more. NAS does this like crazy, which is why I love NAS. So time is fractal means once you understand the fractal and what are the mechanics of the fractal, pick a time frame, Pick 2 time frames, whatever make you comfortable, but you don't want too many moving parts. And once you have that time frame, you stick to that. Back test. How many times do I have a profitable week when I base my analysis around the hourly chart, the 5-minute chart, the 15-minute chart, the daily chart, whatever it is? Because then when you see what you could have done in hindsight, it gives you an idea of what to expect in live price action. Forward testing. Once you finish that forward testing phase, read the tape, get comfortable. Right, it's order flow. That pattern is something that I've seen way too many times to not trust it. So let's take a look at EU. Get that off. Not paying for this guy. Where's the last time we had stop staking? We had stop staking below this low right here. Bam. Where's the candle that closed below? Bam. Overarching confluence in this swing low. Low is closing down candle. Bam. See this? I'm not taking this. I'm not trading this. And I don't need to explain why. Where are you going to look for enter? If you miss this entry, are you going to trust this and put your stop where? In here, below this order block? I'm not going to do that. Put it below this. It becomes, there's too much room for error inside this particular setup, which is why I don't like trading this pair anymore. It has to be textbook. If you ever see me trading EU or GU, the fractal or the setups that I trade were textbook. Outside of that, I don't want them. I don't want them. Add a little confluence and put that time here. At that time, all this liquidity here has not been taken. In particular, this high. The liquidity before it. Which means if this market is bullish, this should expand higher. Potentially, this is a scalp, but because it's against the rules, we leave it alone. Leave it alone. Trade a different pair. It offered, what's this? 998 to maybe about close to 10 pips, and then it crashed. So if you're adamant that you had to get your 10 pips, this would have failed you. So this is why when you have a model, you have to have rules that keeps you out of less than optimal setup. Before I start entries, the model says, leave this alone. Protect me from a loss. So there it is. 3 pairs, same model, all of them same day. Maybe tomorrow I'll do a call exactly at 8 and then do all of this live. But until then, it's been fun. Enjoy the rest of your day, and I hope you got something from this that helped you. Drop a like, show me you appreciate the channel, let YouTube suggest it to more people. All that good stuff. You know the drill.
Have a good day, Kesh. See ya.
Thank you. All right.
Bye-bye.
Bye-bye.
Thanks for the session, Chris.
Definitely.